Good morning. In a report we published last year, we featured the story of Melanie. Melanie is retired, struggling financially, and she's worried about her future. Sometimes banks completely overlook me as a consumer, Melanie shared with us. Melanie is a black woman, and she uses a wheelchair. The story of Melanie tells us that the intersectionalities of her different identities, her race, gender, ability status, make it much harder for her to achieve financial health compared to many others. There are too many people in America today who share stories similar to Melanie's. And they have faced systemic barriers for far too long. The data also confirms this. For every $100 of wealth that a white family holds, a black family holds only 15. The disparities are not only stark, but they're growing. Our own annual Financial Health Pulse study tells us that between 2022 and 2023, the share of families, Black and Latinx families who are financially vulnerable continued growing, while the share of white families who are financially vulnerable remained the same. The data tells us that even when we are making progress on financial health, some amongst us are left behind. We've had a heated debate over the last year on diversity, equity, and inclusion, or DEI programs. And sometimes it's been frustrating to see the conversation on DEI be reduced to a focus on only about diversity within leadership of a company, or be only about unconscious bias training. Those are important, but the most powerful way a company can create impact on financial health is through its products and services. So on the panel today, I'm less interested in having a debate on language and what that means. What I'm interested in is discussing the action that organizations can take to improve the financial health of people who the system does not serve well. People like Melanie. My name is Adeeb Mahmud, and I'm the Chief Program Officer at the Financial Health Network. I am honored to have 4 exceptional leaders on our panel today, representing 4 different kinds of organizations. Let's meet our panels. I have first José Quiñonez. José is CEO of Mission Asset Fund. Shané Harris is Vice President, Inclusive Solutions, Social Responsibility, and Shared Value at Prudential Financial. And Shané is also president of the Prudential Foundation. Greg Cunningham is the Chief Diversity Officer at US Bank. And Yemi Rose is CEO at OfColor. José, I'm going to start with you. You, in your work, see the everyday struggles of people of color. Tell us a little bit about who do you work with? What do you do to understand their context? And then how do you customize what you offer to meet their needs?
It's wonderful to ask that question and start with that premise, so thank you for that. And also thank you for inviting me to this important conversation. So I lead an organization called Mission Asset Fund. We're based in San Francisco. We primarily work with low-income immigrant communities to help them improve their financial lives. That's what we do in our everyday level. But there's some moments where we have to do something different. And one of the things that we did during COVID, for example, we had to pivot quickly from working to build a credit, to be providing lending circles, providing direct loans, to actually provide emergency grants. And I want to bring that as an example of how we actually implemented equity, because this is a perfect example of how we were able to quickly pivot our products, but also focus it in a very significant way, in a way that we actually were implementing equity. So the example is this: right after COVID hit us, we started a new emergency grants program. And one, we actually focused it on college students. One, because we were working with foundations, others that that wanted to help specifically college students in California. So we quickly, we created that fund, and then ultimately we raised about $4 million for that specific fund. We had other funds, but for this one was about $4 million, and we ultimately helped about 8,000 college students. The issue was this, that we got like over 17,000 applications for this. And so the question was like, how we were going to decide on who to support, out of the 17,000 or so applications. And traditionally, normally what people do is like, well, first come, first serve, or people kind of do like a lottery type of a thing, right? But in my mind, that actually deepens inequality, because you basically are supporting people that have the fastest internet access or the fastest, more access to information, right? So when you do it like that, that type of approach, you deepen inequality. So the way we implemented equity, because again, and I love that you started from that perspective, because it wasn't about debating whether equity is a good thing or a bad thing. I think we can all say that it's a good thing, right? And once we start with that premise, then well, what do you do then? How do you actually implement it? So what we did, we created a framework to analyzing people's applications to the point where we actually collected race, gender, zip code, and a bunch of other data points. But guess this, we didn't use race or gender or zip code as a factor for determining who to support. We actually use other financial information to decide on who to give people that one-time emergency grant. And ultimately, at the end of when we analyze, okay, who got the money, 92% of the people that got money were people of color. Without us using race or gender, or even zip code as a basis for that. So how did we do that? Well, we used, we thought about our grant as an income stream, that we wanted to add it to the people that had less income streams. So we actually collected information about income streams and also their financial obligations, family constraints. And then we said, well, here are the people that could do the most with the $500. Because we could all have used $500, right? If I gave you $500, of course you can go out for dinner. But the people that would benefit the most were people that had like less income streams. And so I say that because, equity, sometimes we kind of talk about it from just a racial category or gender, but there are other ways of getting about that. Now, quickly end with this point is that when we then realized that, oh my God, 92% were people of color, and then we published the results of that, right away I got a call from the governor's office and other people in academia, because they were like, how did you get to that level of targeting without using race as a factor? And because they were very interested in it. It's like, well, I was like, well, this is how I did it. But from policymakers, particularly in the education field, because they're barred from using race, right? They wanted to understand how we got to that. So equity is actually something that you can like live and implement and actually carry through, but you have to be more creative than just sort of taking mainstream, thoughts about it. So anyway, there's much more I can add to that story, but I wanted to kind of just signal that it's actually successful, it's actually possible to implement and live out that value once you actually embrace it.
Yeah, that's a great example of action, and you are both able to pivot quickly, but also be very intentional about who you're going to target. Shané, Prudential has launched an initiative called Blueprints to Black Wealth.
Yes.
And this is a shared value initiative, which means you are trying to create tangible business results by addressing the needs of Black consumers. Tell us a little bit about this initiative, and how are you tailoring this initiative to meet the specific needs of Black consumers?
Yes, well, thank you so much, Adeeb, for having me, and really happy to talk about this emerging work that my team is leading at Prudential. So Blueprints to Black Wealth is Prudential's first holistic business growth strategy focused on the financial journey of Black Americans. And we created Blueprints to help address gaps in the financial services industry, gaps that have historically made it difficult for Black Americans to build generational wealth. But before I delve a little into Blueprints, a little more, I would like to share a little more about Prudential and the context of how our work, both through our philanthropic efforts and shared value efforts, have focused on addressing barriers for economic opportunity for Black and Brown communities. So we're headquartered in Newark, New Jersey, the city of our founding 150 years ago. And what makes that unique for Prudential is, unlike many of our peer financial services institutions, even those in the New York metro area that might be across the river in Wall Street in the financial district, our global headquarters is located in a community that is majority minority. So we see firsthand right on Broad Street in Newark, New Jersey, the challenges and barriers that communities and residents face because of racial inequity. So those experiences have really shaped Prudential's approaches to social responsibility. We have over a 50-year legacy of investing philanthropically and through our impact investing program to provide economic opportunity in communities like Newark to help reduce the racial wealth gap. So we're not new to this. We're not a company that realized that this was a challenge in 2020 and started really doing work in this area, but we've done this for decades. But we've also realized that philanthropy alone can't solve this challenge. That philanthropy can help remove barriers and create pathways for economic opportunity through innovative practices. But to really influence change at scale, we're going to have to really influence capital markets. And for us, we saw an opportunity to do that internally at Prudential. So that led to the creation of Blueprints to Black Wealth. So as I shared, Blueprints to Black Wealth is not philanthropy, but it's being co-led by my team and our business, one of our operating businesses, our individual life business, as a way to have a different approach to engaging Black Americans. And this business growth strategy makes a lot of sense because I think, like Prudential and other peer institutions, we know that there's a market opportunity to do business with Black consumers. McKinsey conducted a study a few years ago that sized roughly $225 billion in Black consumer spending that the financial services industry could capture if we offered more equitable and accessible products and services. But we also know that Black Americans, particularly the younger generations, Gen X, Millennial, Gen Z, they're highly motivated and focused on building generational wealth, and that as a cohort, their incomes are one of the fastest growing in this country, in many ways growing at a faster pace than white Americans. But these same consumers, potential consumers, also are very acutely aware of the historic barriers that have created financial exclusion and stripped wealth from Black Americans, and those practices were really perpetrated by the financial services industry. So our work with Blueprints to Black Wealth really focuses on authentically engaging Black Americans, meeting them where they are to help them on their financial journey, and positioning Prudential as an ally, right, to help them develop a blueprint of their own. So that they're in charge and empowered to drive their own financial future. And we do this because we work with trusted community partners to increase in education and awareness of tools and resources that can help people on their financial journeys. We also work closely with our financial advisors, talking to them and getting their expertise on what works for the needs of their clients, and providing them with resources and the supports that they told us quite candidly internally at corporate that we needed to put in place to effectively engage Black clients. And that includes creating more inclusive campaigns, right? Not total market strategies that create a rainbow coalition, but we know consumers are more sophisticated. They want to see themselves. They want to see their life experiences in the images that companies like Prudential promote. And that has been a big shift in even our go-to-market strategy there. But I would say separate from providing a differentiated customer experience that we believe Prudential is well positioned to do for Black Americans, Blueprints fundamentally focuses on internal changes within Prudential, working to build the capabilities that the company needs to more effectively connect with diverse consumers. So I'll just talk about three kind of big shifts that we're hoping to see through our work in Blueprints, as I close. We're focused on a couple of internal changes, and the biggest one is really challenging conventional business practices on what makes a viable customer. Rather than identifying customers solely based on their income or their investable assets, we're placing customers at the center of our go-to-market approach and really looking a little more holistically about, what is their lived experience? What are their motivations and behaviors? Are their need sets aligned with our products and solutions, rather than just labeling, well, this person doesn't have enough assets, so therefore I'm not going to really take them seriously as a viable customer. This also includes deepening our understanding of the Black consumer needs, right? Really looking at cultural nuances as an additional driver, not just looking at the individual and maybe possibly the family, but really understanding how community forces, how societal forces really influence behaviors and motivations, so that we can have better insights as a company to help us connect and best meet the needs of diverse consumers. And lastly, this really focuses on how do we train our workforce, our sales teams, our marketing teams to think about this consumer segment differently. Adeeb, you talked a little about diversity training, right? And the interesting thing that I have found is when you frame the market opportunity and the businesses see this as an opportunity for growth, we have our sales team pulling us in, saying, we need to better understand these cultural insights. How do we do this differently? So there's a demand there.
Yeah, and you've been able to create that demand.
And we've been able to create that demand. So, ultimately, I think, our vision for Blueprints is that it will drive growth opportunity for Prudential, but we're really seeing this as an opportunity to really shift outdated narratives that the financial services industry has on diverse consumers, and that we could really address a large, viable marketplace, for the industry.
Yeah, and I appreciate very much the framing that Prudential is taking in both acknowledging the role of the financial services industry and then talking about it, as you said, not just as a philanthropic initiative, but using capital markets.
Yeah.
Greg, U.S. Bank has recently made a business decision to expand into California. California today most Californians are people of color. How is this causing you to think differently about what kinds of products and experiences you're going to offer?
Yeah, not only are most of the residents, actually 60% of the residents of California are people of color. I appreciate the question, Adeeb, and this question was also sort of posed to me differently by one of our senior executives in one of the business lines, who asked me, now that we've acquired Union Bank in California and we're expanding our presence in California, what's our DEI strategy for California? And I literally looked at this person and said, there is no DEI strategy for California because it's California. It's like 60% of the residents are non-white, 40% of them are Hispanic. It's not a DEI strategy, it's actually a growth strategy. And I'll come back to talking about that in a minute, but I think it's also important context to talk about this pivot that happened at the bank after George Floyd was murdered in Minneapolis, which is where our headquarters are. Literally 3 minutes from our office, I can literally see the neighborhood outside my window. And it forced us as a bank to make the type of systems change in terms of how we thought about not only this work, but what our role in it was. I also had conversations internally that talked about the role of financial services in creating and being complicit in many of these disparities that we're trying to solve for. But what was important is that both truth and reconciliation, in my mind, are sequential. And you have to come to that realization before you can start working on solutions. And for us, it was a conversation about how do we bring the entire bank to these solutions. This is not a DEI opportunity. This is not a philanthropic initiative. This is actually something that actually smacks at the core of who we are as an organization. I've said many times that I've never had more job clarity in my career than I have right now, because our mission as an organization is to power human potential, power people's potential. I wish I'd written that because I actually think it's brilliant, but my job is simply to make sure that that statement is true for everybody. Like, how do we ensure in everything that we do, in all of our business practices, that we're delivering on that promise for everybody? And so bringing the whole bank meant thinking about how do we bring together this notion of what is our role in social justice, and that there is no separation between social and economic justice. They're inseparable twins. Like you actually can't achieve one without the other. And so for the bank, we launched this initiative called Access Commitment, which was about closing wealth disparities. But specific to California, before we could even close that deal, we actually had to negotiate a community benefits plan with many national community organizations. Over 200 organizations are part of this conversation. And sometimes, necessity is the mother of invention, right? And it forced us in many ways to look at the things we were already doing, ensuring that we had specific targets and measurements around all of the things that we were doing. But just as importantly, it really challenged the way that we worked across the organization and how we brought business lines into this work. Specific to Access Commitment, I went to every one of our senior leaders on our managing committee, our most senior operating committee, and said to all the business lines, I need each one of you to think about how you're going to lean into Access Commitment. Because the true business case for DEI today is about innovation and it's about growth. The reason the representation matters is because it's more profitable. Mm-hmm. In what part of our business do we not actually lay out the business objective first and then enable it with a talent strategy? And think about what are the skills and capabilities that are necessary to achieve it, and why would we treat this any differently? So as we go into California and we expand throughout California, which significantly increases our market share in California, where we did have an existing presence, we now understand, because of the demographics, and oh, by the way, 100% of the population growth in our retail footprint is coming from diverse communities. That is y'all don't hear me. That is my business case. 100% of the population growth in our retail footprint is coming from diverse communities. Like I just say that and walk out the room. The only question should be how. Like, how do we do it? And so we've launched what we've called this inclusive growth initiative, which is about how do we begin to be more relevant? How do we go to market at scale? How do we think about the marketplace at scale? How do we make sure that we are putting people's name on the invitation? Before we came out, I was telling Adeeb, one of my favorite analogies is, it's not that we haven't been talking to and building trust with communities of color, but it's like getting a piece of mail sent to your house, an invitation mailed to your house marked to resident. Like we've all got, they didn't really invite you. Like they kind of invite whoever lives in the house. What we're talking about with this inclusive growth initiative is personalizing the invitation. Yep. Making sure we've got the right products and services. Where we don't, we might have to develop new products and services. Making sure we've got the right marketing messages. Beyond just thinking about the casting, are we in the right media channels? Are we talking in the most relevant way to these consumers? And then the final piece, so there's this relevance piece, there's this communications piece, and the final piece is you got to measure it. We actually have to think about, are we getting the outcomes? Are we driving the outcomes? Do we have the right KPIs? So I'll close there, and I know
I like that example very much because we can all relate to it. It's so simple yet so broad and powerful. Yemi, on your website, you say that you take an unapologetic focus on people of color.
Yes.
What does that look like in practice? So when you're engaging with employers, especially the ones who are most advanced in action and thinking, how are they working with you to address the specific needs of employees of color?
Okay, I'll take the first part and then transition into that. And by the way, thank you for having me. Long-time lurker, first-time panelist. What it means in practice is we're taking, we're putting folks of color at the center of everything that we're doing, right? When we are building our tools, our content, and our coaching, we're making sure that the folks that are building these services understand the lived experience of the people that they're serving. It means ensuring that we account for the unique ways that folks of color engage with money. We call it the minority money experience. The way we talk about money, or I guess more accurately, don't talk about money. I often said that there's a certain level of trauma that comes with trying to generate wealth as a person of color in the United States. And this manifests itself in several different ways. Like a quick example of one is the low levels of institutional trust that we see with employees of color. And then an extension of that is a proclivity towards wealth creation tools that are outside of the system, right? So crypto and stuff like that. So you have to have a really good understanding of the person that you are creating these tools for. I know for me personally, I was that senior executive. I was making good money, but I was not contributing to my retirement. And that was because I was sending remittance payments. I'm from Jamaica. I was sending remittance payments back home, helping take care of my nephew. But my story is not uncommon at all, right? You have, the data here is clear. You have a situation where even if you've achieved pay equity in your organization, you can have two employees, one is of color and the other is not. An employee of color, and the data is clear on this, is probably took out more student loan debt in order to get where they are. They are probably focused on their parents' retirement more so than they are theirs. And it's because they're probably the first in their family to get this really good job, right? And there's a responsibility that comes with that, or a perceived responsibility that comes with that as well. And so it's really focusing in on the unique ways that we engage with money. Now, the second part of your question is about how the employers are putting this into practice. When we just started out, we're a startup, so we have 3 pillars. It's coaching, it's personal finance content, and it is financial health tools, right? We had organizations that wanted to split those up. We were very clear that we're gonna, it's a little trite, but to meet people where they were, we needed to offer a holistic offering. And we've since, not done the a la carte thing. We've since said, folks, we're gonna be at different places on the affluent scale. We're bonded by the near almost universal neglect from the financial services system, but we're obviously not a monolith. And so, the folks that are most successful are the folks that adopt it as a whole and lean in on the communication side to ensure that the employees know that this is not a zero-sum game. We're not taking anything away from one employee and giving it to another. We're just providing more equitable services.
Great. This is an open question for any of you. What's the one area where you are hoping to accelerate your progress even more?
Can I just jump in real quick on that? And
Yeah.
I know we're running out of time, but I think this is more like a call for all of us to accelerate, because I think the realities of California is going to be the realities of the U.S. in a very short order, and I would love us to be prepared, to not go into that not knowing. We need to be prepared, to confront that reality sooner rather than later, because it's there. And I think part of that is acknowledging that, yeah, we're talking about these big ideas, big values, like equity. Yeah, we need to take them as a given. We don't need to argue for that anymore. Now we need to start showing how to implement, and then we need to start showing success in implementing that. But all based on the realities of people. Because one of the things that I've learned is that for people of color, immigrants, people on the margins, we are essentially the secondary users of products and services that have been built and designed for wider, richer communities. And so that discrepancy of being the secondary users it increases the magnitude for failure. But now we have technology, now we have finance to actually do better. So instead of creating something for everybody that does nothing for anybody, particularly people on the margins, it's like, let's create more products, more services that are specifically tailored to the realities of people that we're serving. And so I think it's a call for all of us to do more and really leaning into that.
Yeah.
And then embracing that diversity, that complexity, embracing that so that through that we can then create equitable results. But I think we have to do that now instead of waiting, and I don't want us to be like, 20 years from now, and like, oh, this is the reality. It's like, no, we've known this.
Right.
This has been known, so let's start preparing now.
Yeah.
I'm most excited about this notion of inclusive growth and really reshaping the narrative that this is about opportunity for everybody, and it brings innovation to our business. Communities that are suffering are bad, obviously, morally, but it's also bad for business. And if we can bring vitality back to these communities, it's better for everybody. When we have communities and small businesses that are working and employing people, that's great for everybody. I mean, the best social program ever created is a job.
I would just add, I think we have a real opportunity to braid multiple strategies together from different sectors to better have a holistic approach to meeting the needs of people who are our customers today, right? This is not customers of the future. The demographics have changed. This is customers of today. And I think what's exciting is to broaden our thinking about what does it take to win their business? What does it take to support their needs and build their aspirations? And platforms like the Financial Health Network are doing that work by just that information sharing. So,
yeah, I'll be quick. I'm excited to see record keepers increasingly capture race. Race is probably the #1 predictor of wealth in this country. And a lot of benefit systems, HR systems, they would say that they don't see color, and I would say that in not doing so, you are missing the disparate retirement outcomes that are rooted in race. You're missing a lot. So, I'm excited about, we'll call it the new DEI. I mean, there's a war against DEI. I don't think there's ever not been a war against DEI. So I'm excited that this is helping to give a little bit of clarity in measurable DEI outcomes, not necessarily just quotas, but really looking to improve the lives of the folks who may not make it on the board or may not be a senior executive.
What a powerful discussion to start off our day too. At the Financial Health Network, we believe that a person's identity, for example, their gender or their race, should not be a predictor of their financial health outcome. In our current strategic plan, we intentionally call out historically marginalized populations. Also, as part of our strategy, we are hoping to conduct additional research on the needs of specific populations, as well as engaging with companies to understand how decision-making processes within companies can help advance solutions for these populations. So I invite you to engage with FHN folks here at Emerge and afterwards so that we can find more opportunities to collaborate to improve financial health for all in this country. And now, please join me in thanking José, Shané, Greg, and Yemi.
Thank you.